Saber. SABR. It's a new stock for me. We're looking at it. If you're one of my members, we do a full back test review using all my software, my premium software that I'm either sponsored to provide or I've invested in to bring you, my members, the best value service. A member can ask me to do this service. It's like a 10-minute deep dive on the stock, and we're going to have a look at it right now for Chris Boshoff, who's asked me to do a full back test and review. We're going to look at the price, the intrinsic value, the debt position, insider trading, who's buying, who's selling. We're going to look at its value, its balance sheet, its financials, the news around the stock. What is it? Is it undervalued? What Wall Street targets are? Where we see the price going medium term, short term, long term? What do I think about it? Would I buy it? A full back test? We're going to do all that in the next 10 minutes. Let's get into it. All right, so if it's your very first time here, consider subscribing to the channel. If you do become a member, you don't have to pay for all these premium services that I've invested a lot of money in. I provide it all for free to my members to bring you the best service possible. All right, let's get straight into it. This is Saber, ticker symbol SABR. I'm not in it at the moment at all, but let's take a look. What is Saber? Let's have a quick look at this introductory screen, and let's have a quick look and see what it is. Saber, let me zoom in to make it as clear for you as is possible. Let me just do that there. There we go. So Saber Solutions, provider of the global travel and tourism industry. It provides data-driven business intelligence, mobile distribution, and software as a service solution. The firm operates through the following segments: travel solutions, hospitality solutions. The travel solutions segment provides global travel for suppliers and buyers through a business-to-business travel marketplace. The hospitality solutions segment provides software and solutions through SaaS and hosted delivery models to hoteliers around the world. The company was founded in December 2006, headquartered in Texas, just down the road from me. And the ticker symbol is SABR. Okay, let's zoom in a little bit more and go into it. The CEO is Kurt Joseph Eckert. The first thing I like to do is start to build relationships on my X account and Instagram with the CEO and partners and investors at the company. Start to make friends, reach out to them. That's the first thing I like to do, as I like to find out who the CEO is, what their history is, how effective they've been, and so on and so forth. Before I buy any company, I like to make relationships, as I do with all my investments. Employees, 7,461, headquartered in Texas, founded in 2006. Let's have a look. It's high risk because the maintenance is 50%. So it's got the lowest is 25%. There is a higher risk if you are using margin. 1.3 billion. It's a small company. It's losing money, down 2.14 price per earnings ratio. No dividend here. Average volume 4.38, and the volume today is 1. So no particular volume today for any reason. The low today is 338. The 52-week low is 299. The high is 792. So we've had a bit of volatility there. Let's scroll down and have a bit more of a look. I don't like to use Morningstar for analysis because at the end of the day, it's very biased, and it is what it is. It's as reliable as whatever. It's out of date. It's a month out of date. That's why I have premium services, which I will share with you in a second. Thank you for the subscription, Nick Toshi. Thank you. It's giving a hold of 66%, a buy of 22, and a sell of 11. That was a month ago, so it's not really that helpful, but we'll move down. And fair value, they're saying, is 9, and we're at 345. We'll come on to a real analysis in a few moments. As we can see, it's losing money. It's slowly improving and has been beating on expectations most of the time. Expectations are raised, so we're expecting to see, remember, the expectations are set not by the company, but set by Wall Street. So we got to bear that in mind. It will be available tomorrow. So this is a good timing for the stock. I always like to look at who's investing in the company. This gives me sentiment of who would buy this, who would trade it, how it would trade, and so on. Carnival. I know everything about Carnival. I've worked on every Carnival cruise line. Now, Carnival own multiple cruise lines around the world. awful company to work for, and it's a corrupt company, actually. We won't go on about that right now, but anyway. Carnival, Norwegian Cruise Lines, American Airlines, Invesco Mortgages, Delta Airlines, United Airlines. You can see the travel industry all over this. It's a risky sector. It's not one that I particularly like, not one I find greater opportunity in other places. But however, that's the initial look there on Robinhood. Now we're going to go deeper into it, and we're going to also look at the balance sheet, the money, the value, and also we're going to look at the insider trading, if at all there is any. So Sabre right now, let's have a look at the chart. It's down. Let me show. In fact, I'll share with you this way. If we look at the maximum, we are 79% down on the maximum. Over the 5 years, we're 85% down. 1 year, we're 42% down. This is no surprise in this industry. We all know what happened to the tourism industry during COVID. But over the last year to date, has it risen? No, it's still down 45%. And we are seeing an upswing in this sector. So why is it down? I would want to do a research on the news of the company if I was buying it and find out why it was down at these particular points and what drove the stock up here. What happened here that didn't happen here? I would like to look at that. When we are so far down, why are we getting these bounces? I'd like to know why. Anyway, let's go now over to, we'll do a back test. First of all, I like to compare anything to the S&P 500. So just after IPO, I put $10,000 into Sabre and $10,000 into the S&P, and no surprise, Sabre, I'm down to $2,000. I've lost 80% of my money. We already knew that. That's in blue, and we can see in red is the S&P. Now, what I'm looking for is some correlation. March 2020, look how it went down much more due to COVID. That's no surprise. Obviously, due to COVID, the industry collapsed. No surprise. S&P went down, but not as much as this company. Of course, it wouldn't. But what I'm interested to see is once COVID was over, how did things, or at least over the worst of it, how did things compare to the S&P? Well, we went flat for a while when the S&P started to recover. Obviously, that would be typical of the industry. And then we got a quick rally, but then no more really than the overall market. And then when things started to stabilize with the S&P, we're still falling away more than the S&P. So not good. I'd rather buy the S&P so far on this basic look from here. But let's now go into some much more detail and look at the company as a whole, because obviously if it's got plenty of cash on hand, it's not got much debt, it's investing in its future, and it's got a lot of potential, then maybe it's still worth an investment. Right, the best case scenario, if the stock was worth $25, if we value the company at $25 a share, which is the best case in the perfect world, we are undervalued, 87%. If we base cased it, we're undervalued by 80%. If we best cased it, we are undervalued at 75%. So this is looking pretty good for the stock. I think you'll agree. The undervaluation of the worst case scenario is still 75%. Pretty good, right? Looks pretty good from that point of view. Now, Wall Street have given it a 64% target. That's good. A relative value, 86%. We've got DCF of 64%, all green, all across the board. Gross profit, positive gross profit, 1.6 billion. Exceptional ROE, because remember, the stock price is just the price that people are prepared to pay. It's not the actual value of the business, right? The business could be great business, just no one's buying it or no one's investing in it, and that's what drives the stock price down. So we're looking for value, and that's what this service I'm providing now is for. Okay, now as we can see, we are down at all-time lows, pretty much massively undervalued. We've been undervalued all the way through back to here. So it does look pretty a good time to buy potentially. Let's have a bit more detail here on the fundamental financials. Now, what have we got here? We've got 2.8 billion, up 3%. We can see some growth of recent months. We've got in June, we had 3.4 billion. Then we had 3.5 billion, excuse me, and 3.6. So we're moving in the right direction, even though the company isn't being bought, sorry. So it's looking pretty good from a standpoint of the fundamentals, the financials, the balance sheet, and the intrinsic value and all the rest of it. Operating income is up 15%. We like that. Net income is up 11%. Capital expenditure, however, is up 20%. They're spending more money, but that means they've got money to invest. We've looked at the balance sheet. They're innovating. They're spending money on research and development. We like that. Free cash flow is up 12% as well. Operating cash flow up 22%. Looking pretty good so far, right? Now then, this is where things aren't quite as good. Assets, 4.9 billion. However, liabilities, 6 billion. So the balance sheet is not as good. 4.9 billion in assets, 6 billion in liabilities. That is where it falls apart a little bit, right? Efficiency. How efficient is the company? Well, it's got good margins, 58% margins, and looks like they're increasing. That little pop for some reason back here in 95% margin in March 2021, but now we're sort of steadily going on at 58%. Operating margin is down 5%. Net margin is down 19%. The FCF margin is down 9%. All right, let's scroll down and look at the fundamental score. This is where the debt issue comes in. We've got a profitability score of 38 and a solvency score of 30. Not looking good. Debt is a little bit hot on this one. Positive net debt is bad. Long-term solvency is bad, but the low DE is good and the long-term solvency is good. On the profitability side of things, we are positive gross profit looking good. Exceptional ROE. ROE is increasing and ROIC is increasing, but excuse me, the solvency isn't the best right now. Wall Street targets, however, they like it. They're giving it a 15% upside from the lowest forecast, a 60% upswing from the mid-range forecast, and the high forecast is 170% upswing. So the market give good estimates. Now we want to go down to our last thing to see if we've got any ownership information here. The last transaction was made on October 30th. October 30th, which was just a couple of days ago, if not, yes, 2 days ago, by Mandel Gale, the director who sold 4,000 shares. Now, that is no big deal. No big deal at all. 4,000 shares were sold. During the last 3 months, we've had 3 million shares sold. Sold 4,000. Could be simply a tax position. Automatic might not even be aware it's happening. It's just an automated tax position or whatever. But that was the last action. The last action was on October the 30th. All right. So anyway, but what is interesting is we've started to see some buy-ins as well at the same time. It's quite interesting. This one I've not. This is the first one I've seen like this, where we've seen some buy-ins coming in and some sells at the same time. So I'm not quite sure what to make of that. Insiders are selling it and buying it at the same time. So a bit of trading going on there. Anyway, there's our reaction and look for the very first time at Sabre. It's a brand new one for me. What do you think of it? Are you interested in it? I don't know. Leave me your thoughts. I will post this out now as a video all by itself, so you'll be able to leave me your thoughts and comments. I will create an X post, try to build a relationship with those at the company, and if you've got any questions or anything you want me to put to the connections and friends I make, which I will make at the company, then I will get those answered. I'll make videos for you and answer those questions if you are one of my members. So there you go. What do you think of Sabre? It's not one for me. It does look like there's opportunity here. It does look like it's undervalued. They've got some debt, but everything overall looks potentially okay. It's just not one for me. I'd rather buy other things. It's not a sector that I'm particularly interested in, but there you go. Click above my head and you'll find my X account where I post the information and start to build relationships with the company. Click above my head for all my links, social media, if you want any of my newsletter, any of that stuff over there. And when I post the video and other things related to the sector, maybe I'll do a playlist for Sabre. Click over here and I'll post that. And down here, you'll find more videos interesting in this series as well. There we go. That was done for one of my members. If you'd like to become a member, look below in the description of this video. I go to work for you up to 10 hours a day if you become a member of my channel. Until next time, as always, take care of your money, your crypto, yourselves, and each other.